One institution controls the entire U.S. economy more than any president, any company, or any law. It's the Federal Reserve, and most people have no idea what it does. I'm going to explain this as simply as possible, with real numbers and actionable steps. Let's get into it. Let's start with the first key point. The Federal Reserve, or the Fed, is the central bank of the United States. Created in 1913, it manages the money supply, sets interest rates, and acts as a lender of last resort during financial crises. Here's the next piece of the puzzle. When the Fed raises interest rates, borrowing becomes more expensive. Mortgages, car loans, and credit cards all cost more. This slows spending and cools inflation. When the Fed cuts rates, borrowing is cheaper, which stimulates the economy. Here's something that changes the game. During crises, the Fed buys government bonds and mortgage-backed securities to pump money into the economy. Between 2020 and 2022, the Fed's balance sheet grew from $4 trillion to nearly $9 trillion. Now let's look at this from a different angle. Stock prices tend to rise when rates are low because borrowing is cheap and bonds offer poor returns, pushing investors into stocks. When rates rise, stocks often fall as bonds become more attractive. And here's the part that ties everything together. Pay attention to Federal Reserve meetings, which happen 8 times per year. The Fed's decisions on interest rates move markets more than almost any other event. Understanding the Fed gives you a major advantage as an investor. If you found this helpful, make sure to subscribe and hit the bell icon so you don't miss our next video. Drop a comment below and let us know which tip you're going to try first. See you in the next one.